Hey everybody, it's Mark here at TSLA, and unfortunately we had another pretty bad day in the Tesla world, and really not just Tesla, but the entire market was down considerably. Also, just think of that, some of the losses today are some of the biggest losses we've seen since the start of the rally, some for start of the year. But as far as Tesla goes, I had another day down over 2%, closing at $254.11. That's a $6.96 drop over yesterday's price, translating to negative 2.67% in performance. And as you can kind of see based off the chart, and by the way, it's kind of a light news day as far as Tesla goes. There's nothing really relevant happening in specifically Tesla's world that is, driving this price action. In reality, it's just mostly overall macro when it comes to the downgrade that happened yesterday. Now, a lot of people are coming out, like even like the administration, Jamie Dimon over at even JP Morgan was saying that this doesn't really mean anything. And if we think back to 2011, it was really the S&P Global company, that agency that downgraded the country. So if you see an S&P, which is kind of the de facto, I would say the people are taken most seriously when it comes to debt rating. I would say that you could have some big problems, but the administration and Jamie Dimon, maybe we don't see eye to eye on everything, but I do kind of agree that it is problematic with the timing of the downgrade. Number one, it was right before the bond sales have started today, the long bonds. So it's a long-term debt that was downgraded. And it just happened to be the day that long bonds are being auctioned off. So the timing is that's kind of an issue because it seems motivated by something when if you felt this way, you could have just downgraded the debt back during the debt ceiling negotiations. I think that would have been more relevant. I would have maybe spurned some faster action from the Congress. But it is what it is, and we're unfortunately suffering because of it. It's kind of an unfortunate situation because, if you look at the chart, and if I was just to kind of zoom out a little bit, like it's what, June 13th. So we're at June 13th, 2023's pricing on today, August 2nd, 2023. So we're right in this area. And I moved this green bar down. It was up higher up to kind of signify an area that had a lot of interest over at the 267-ish pricing. But now we are definitely much lower in this area, which was a lot of consolidation that happened early on in June. And then, of course, at the end of June as well, you see this chopping happen. Now, just know, we kind of chopped a little bit on the lower end of this area of interest, but it kind of zoomed under and kind of fought its way back up. But we're on the lower end of things after hours. We're bordering on the edge of $253. You can see that right there. So that's another dollar plus being sold off, and it's going down a little bit more. So it's another dollar sold off in the after hours. And I guess we kind of anticipated this. We were talking yesterday how this type of price action that we experienced from the day before, which is that kind of drop down in price and that kind of stagnation that was kind of flagging all day long, never really making any new highs. I guess you can say today we had a little bit more promising action in the sense that there was that gap down, a little bit of buying, quick sell-off, and the sell-off was met with buying that brought it from $250 a share, about $250.47, closing at $254. But of course, we sold off. So there was a little bit of interest there. You look at the chart. I don't really see a relevant area other than maybe that buying on that gap up. But it's not really a place that I think is all that great or pivotal. It looks still pretty bearish. We've been talking about that for a couple of days now that, ideally we wanted the yellow to work out. None of that happened. And instead we're getting what we were thinking is on the short term, we brought up the chart of redistribution, which is kind of that really quick sell off into an automatic rally. And then this chopping going on here. So what could this be? In this chart, you can see over here that this could possibly be the AR on our chart. This next peak could be kind of that higher high. And then this could be kind of an exaggerated sell-off over here. So you could say that where it's labeled LPS, that's actually the middle part of this pattern. on this distribution schematic 1. And then we kind of chop all the way back up. We don't actually make a new high. We don't make an equal high. We just make a higher high than the AR, which is the automatic rally. I think it's all that really matters for the schematic to kind of be relevant. And then if this part over here, which is the third peak in the distribution schematic, is equal to this part here on the graph, which was from Monday, July 31st, where the price of Tesla was around 268, that sell-off could just be this. And it kind of makes sense because if we're to draw the horizontal line, I'll try to make this a little bit bigger. So if we're drawing a horizontal line, and it's right here at $255.88, if we're to draw that line and the price was to come below a horizontal support, it would first bounce back up right here. You can see that. It'll bounce back up. It'll meet at the bottom of the horizontal support, which is right here. It will sell off a little bit, and then it'll be bought back up a little bit, and then continue a sharper sell-off and to complete this distribution scheme, which is essentially, like we said before yesterday, it's basically a way for them to liquidate their shares, and them being people that own a lot of shares who are trading this this ticker and really any ticker in the market, because it's kind of following the same pattern as far as this type of the sell-off was equal across the board. Now, the other names don't have the same distribution, quote unquote, pattern that Tesla has, but it does look pretty bearish. What can make this go up? There's really not that much that can make it go up. Even if Apple and Amazon's earnings are just out of the water amazing, and they could drive the indexes up, which would bring up other names along with it. You know, a rising tide lifts all boats. But it wouldn't really perform all that great. It doesn't answer the fundamental issues of the economy or the company in specific. So what would happen if we continue to sell? We talked about Tesla meeting the gap over here. 240 would be probably where you can see some very temporary buying come in. What would that look like on the chart? Let's say we do gap down at $252.99. A quick sell-off to the gap would be $12 a share almost, which would be 4.72% down. Can that be done in one day? There's really no reason why it couldn't be. Since the close of yesterday, the lowest we saw today was 4.18%. From the high, from the gap down's high to the low of the day, that was at $11 a share. So it's really all not that surprising. We've been also, if you haven't listened to my videos, we've been trying to identify this type of trend, and we've been implying a lot of hedging. I'm not saying that's being really bearish, but it's just trying to do whatever you can to protect your downside instead of just kind of sitting there and letting price action play out. And I understand if you're kind of like a buy and hold investor, you kind of don't care about the movements on a smaller time frame. But the small time frames on Tesla are very considerable. It's not like this is going down 1%. It's not like if you're holding the S&P 500 index, and a 1% day is a huge day for S&P 500, meaning, like, for example, if say was a 1% move down, it would have been like $4.50, but each share would cost $450. And we know today Tesla dropped like $6 something a share, $6.96 at $7 a share essentially, off a stock that's $254, $260 to start the day. So the volatility of this name makes even the short-term movements brutal, especially if you're very highly concentrated in Tesla. And, you know, I don't have much comment about that. That's something for you to decide how concentrated you want to be. But if you are super concentrated in a name, it doesn't hurt to kind of think about, like, do you have the free time to kind of watch the stock, to watch the price action, even not on a very short-term basis, like not on a minute-by-minute basis like maybe I would, but if maybe on an hourly basis, maybe a daily basis for the past month. And you can see for the past 2 months, and we've been talking about how this range is going to hold, and we are completely right. I was figuring it would hold around $289. It went up above that for about a day and a half, and it sold off. So by the time the week ends, we would have been ranging above the gap that we took over in 9th of June. We would have been ranging now for 55 and a half days, basically. And not including the blowout top, that was going to be another 4%, I believe. This is 20% up and down. But 20% on a stock that costs $250, that's $50 a share. right? So we can say we can ignore the short-term volatility, but just note that if you own 1,000 shares of Tesla and you lose $50 a share, that's $50,000 of temporary value loss. And for some people, that's considerable amounts of money. What could have you done to prevent the loss, or do you don't have to be helpless in this area. You can do actively, managed Tesla trading to kind of limit downside. Does it limit upside potential? Sure. But it's all about kind of understanding Tesla's price action over the last 2 years. And it's that the movements are not clean like Apple, where it's just kind of a diagonal move upwards. Or, if we were to zoom out on Apple, let's switch over to Apple. And actually, let's just do the S&P 500. Oh, by the way, this is S&P 500 compared to Tesla for today. I wanted to show you guys that the volatility of Tesla compared to the index. This is kind of how, high beta looks like. But I would say that at the end of the day, it didn't underperform based off its beta necessarily all that much. If you're talking about the intraday movement, not the gap downs, but the intraday movement, this is what high beta looks like. Let's turn off the comparison for Tesla and S&P 500. Let's just look at what volatility looks like on the S&P 500. So if we were to go back into spring, you can see that it's just generally up, right? Now let's go add Tesla back again. And so if we were to start from, let's say March, you can see how clean the S&P 500 is. This is essentially what Apple looks like as well. That you have these ups and downs are very problematic. We can talk about all we want about how Tesla can outperform, but also underperforms severely at times. Where in the past, since the June 9th gapped up, Tesla has only gained a couple bucks a share. And we could say the same thing about the S&P 500. So if we were to go up to the gap up where our consolidation started, you can see, and I'm sorry it's on the left side of the screen, but you can be very peaky in the price action with Tesla, but this is the end result. Not much outperformance net over net. It's not doing all that great compared to a much less volatile index fund that follows the S&P 500. Now, if this is all about trading and getting exits out of a stock and realizing those outperformance periods, that's great and all, but it's not looking all that awesome when, let's compare Tesla to the S&P 500. We'll go to a daily chart and just look, and we'll do a quick measurement. Let me delete these lines. So the all-time high at S&P 500, which was achieved on the 4th of January, 2022, 1.5 years ago. From the recent high, it was down 4.22% from its all-time high, and 6.3% currently down right now. And by the way, the chart doesn't look, all that bad recently. The S&P 500 does look a little bit overbought, but it is on the stochastic, it's a little oversold. As far as the MACD, it's crossing. You can see how the blue line is crossing under the orange line. When that does happen, things tend to sell for a couple days. So it wouldn't be all that surprising to see a lot of de-risking before Apple, even tomorrow night. So we have Tesla. Let's look at Tesla now. So we know that the S&P 500 is like down 4-point-something% from its all-time high, or 6.3% as of today after that big loss for all the names. Tesla's just not doing all that great either, especially compared to it. We can delete these schematics now. They're kind of in the way. And it's a little crowded on the daily chart, but I just want to do a quick comparison to see where we're at. So from all-time high, we're down 40%. So it's kind of discouraging. I can understand a lot of people talking about Tesla's volatility and how sometimes it doesn't really reward the shareholders all that much, considering that they're making more cars now, they're still making profit, or other car companies are not doing all that great, and the other car companies did drop just as much as Tesla did. So at least for the sector, Tesla's not being underperforming, especially performing in line. What do we do tomorrow? I think I always talk about how Thursdays are good setups for Fridays, in that the market likes to set up a Thursday for a good Friday. In some way, it could be either shorting into Friday or longing into Friday. But after the market sold off considerably, and with earnings being up tomorrow for the Amazon and the Apple and the like, both of those names sold off. They weren't having outside performance really. If you held their options, you can tell that the options are kind of staying in a certain value because of the implied volatility of the earnings event. But it could be a good entry if it's red tomorrow for a long on those names. As far as Tesla goes, I don't know if that would really benefit all that much from those names doing very, very well. And the reality is those names might not be doing very well just because they are consumer facing. They are reliant on people spending large amounts of money to buy product. And is that happening a lot? Maybe not so much. Maybe retail isn't the greatest sector to be in. You know, Tesla is kind of like retail in the sense that it sells cars, and those are big ticket items. And Tesla is doing an okay job of moving product at the expense of what I believe is other manufacturers' EV sales. And we heard recently, even today, that Ford was having a problem with its lagging EV sales, even though its internal combustion engine sales are doing kind of okay. So we didn't have much news that I thought was very relevant to the price action other than the downgrade. So there wasn't any news articles I wanted to share with you, but we would just take a look real quick at the browser just to take a look at Tesla's open interest and volume on its options that expire this week, only 2 days away. You can see, of course, there's a lot of calls at the 275 point. This is just open interest chart. This is not necessarily all that relevant because open interest doesn't necessarily translate into purchases. It's just orders that are being placed, and those orders might be underpriced. But 275 is area of interest. But let's look at the volume chart of the actual things that are moving, and you can see now we have 2 days left in the week, and we have a lot of options already piling in the volume chart for Tesla. So you could say currently that the put floor is $250 as far as the strike goes, 138,000 of puts being generated there, and this was definitely bought up a lot today. That is, the call ceiling would be 260. Just as a reminder, it is currently around $252.90 in the after hours. So maybe you can use 250 as a bottom, but that was not going to stop you from 2 days of selling off. Okay, and look, like we talked about it last week when we were seeing all those 270s being purchased. We were like, oh well, like 270 doesn't make any sense because the price of Tesla is below the quote unquote put floor. The price was like 260 something when the amount of puts at 270 were increasing during the course of the week, and you start to realize it's not a floor if the people buying it in mass are the people who are able to manipulate the price of the stock. They're just people just trying to take advantage of selling stock that they've been swing trading essentially. Now, there is a considerable amount of calls compared to puts. So even though it looks like there's a lot of puts, just know that there are more calls in the system than puts, but that's pretty common for Tesla. It's not really some type of anomaly. So if 260 is the ceiling, the call ceiling, then where would you base off just the first 3 days of this week's options trading want to put the price by the end of the week? So far, it's looking like somewhere around 254 to 256, somewhere up, $1 up or down from this area right here, which kind of has a lot of volume in the overlap. But like I said before, we're already lower than that. We're at the 252 something in the after hours. It wouldn't be surprising for it to sell off even more so. Just wanted to give you guys a kind of understanding that over 260 might not be all that realistic, unless there's some type of amazing news for Tesla that would drive the price higher. And I'm not sure what that would be. That could beat the macro, right? We talked about yesterday about the historical downgrade from 2011. And we may note that second day after trading, and we can we'll just look at Apple, for instance. And this is the chart for Apple around that time, in August and July of 2011. We were, if you remember, it was the Friday, and you can see a very large candle here, and it's hard to put this in comparison to Apple now, because at $13 a share, it's really hard to gauge how big of a drop this is, I think. But if you want to know, the Friday open to close was a move intraday of 5.57%. And today it was what? It wasn't that at all. And the next day, it did sell off a little bit more, though, and it closed at the low at 4.23% for that day. Now, just to remind you, that was an S&P Global downgrade, not a Fitch downgrade. So that within 2 trading days, the day after the trading day was very bad too. That was 8%. We didn't get 8% today on Apple. So if we were to look at Apple's price for today, look at Apple's chart. Back then it was kind of volatile, huh? We'll get to the front. We'll get there eventually. Ooh, it goes up a lot. Okay, so Apple's day was basically an all-sell day. And from the open to the daily low, there was a 1.75% move, but it really ended up being 1.32%. So if the action for the 2011's downgrade is a clue for what would happen tomorrow for a name like Apple, you would see maybe a gap down because things are kind of selling off in the after hours, and you would have a move that is a little bit less than the current day's move, maybe something like $190, which would keep it above what might be Apple's put floor. We can check it out if we want to, but it's not really relevant to Tesla. But it would be relevant if Apple does outperform. Now, does it really matter? I mean, we can always find out right now. So we know Apple is the biggest component for the index. So when Apple moves, it can move markets a little bit because it's weighting in the S&P, in the Dow. It represents a large portion of the NASDAQ. So whenever Apple moves, Tesla can move as well. So when Apple gapped up over here on its earning date, this was May of this year, Apple went up something like 5%, 6%. In that day, Tesla went up as well, in a good relation to its beta, around 7%. What about an earnings date from February? So February, we can see here, this was the earning date, and from that to the next day, it moved up a little bit, about 3-something%. What about Tesla? Tesla moved up like 4%. So that's not bad at all. What about can we find a red day for an earnings date? So the earnings date was here. That was, okay, that's the October one. So the October one was decent too. That was a very decent move from the low of the previous day to the close of the next day. Very decent. Did Tesla move all that much? It doesn't look like Tesla moved all that much because it had a good move before it, but it was positive around 2%. Let's keep going. Apple's earnings on July 22nd. Looks like it was a move up as well, even in July. So it moved up maybe 3-point-something%, and Tesla moved up 5-point-something%. So when Apple does well, looks like Tesla does well. Can we find a day where Apple doesn't do all that great on its earnings? This was kind of a not so great performance, I guess. Maybe a 3% move. And of course, June was very volatile. Well, this is May, but the summer was very volatile because inflation was going up. But Tesla had a very dramatic move down when Apple moved down a little bit too. How about when Apple goes up from earnings and Tesla goes down? So Apple went up 7%. Tesla as well went up a good amount. Within one day, it went up 13%. So you're kind of getting a picture that Apple can move the market considerably. Here, Apple's earnings weren't that great as far as the reaction to them. It was down about 3%. And let's look at Tesla's performance. Tesla went up a lot. So Tesla went up a lot, and this is near its all-time high, so I don't think it gave a crap. about Apple. Within a couple of days, it went up like 15%. So you can see how Apple can move the markets, but sometimes, even like on this day, on July 21, where Tesla goes up, Apple goes down, maybe it doesn't. But recently, there is a correlation there that, the performance of Apple can drive the performance of other stocks just because of its weight and overall sentiment of the market, people feeling good that something that's consumer facing, that's a retail type of name, that's also technology, could be affected. So we saw a little bit buying in the after hours again. So we saw a low of 253, actually 252 and 90 cents or 88 cents. Now it's up 70, 80 cents from that point on earlier in the video. But who knows what's going to happen overnight. You can use Robinhood's 24-hour trading to kind of give you a good gauge of the pricing of Tesla. That's what I do sometimes. You can use you don't have to have any money in it. Just kind of look at the 24-hour trading list that they have. And you can see a lot of names and how they're trading. They have some Chinese ADRs. They have large ETFs for the major indexes as well. So unfortunately, guys, it's not looking too great. There's nothing about it that looks very bullish, and everything about it looks pretty bearish. And I don't want that to happen. Of course, I want it to go up. I don't want it to go down. But after, a break under 248, which would be, if we just go off the closing price, not the after hours price, another 2-point-something% move could bring you back to this point where you could see extreme amounts of buying. There was days when Tesla would gap down early on in this kind of head and shoulders pattern that didn't play out. That would be considerable movements down in the morning around, that was like a good amount. 2.5 to 4.34% that were bought up immediately. And that is crazy. Something like a 6% move intraday. I hope we can see something like that to the upside. That'd be really nice. But yeah, under 248 could be really problematic, where you wouldn't find much interest until the 240s. A dip into the 240 would put you into the gap. And we know that Tesla likes to use the gap to kind of bounce out of, but we've been filling gaps lately. And to fill a gap would be a huge loss in share value. Another $19 a share, perhaps, putting you at the 235 within a couple of days. It's only a 7.5% move. And I say that because, like I just mentioned, Tesla can move intraday 6 to 7% if it wanted to. All right, guys, thanks so much for listening. I'm sorry there's not much great news to share with you, but I hope things can turn around for Tesla. But, is that too realistic? Maybe not so much right now. We'll find out tomorrow. All right, bye.